morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 18th of March. Bank of England, Brexit uncertainty may hit growth. The Bank of England remained unanimously on hold yesterday, as was broadly expected. Officials noted that the uncertainty surrounding Britain's referendum on its EU membership could impact investments and economic growth, and is likely to have been the driver of the recent depreciation of the pound. Recently, bank officials had even mentioned the possibility for additional easing over the coming months should they feel the economy requires it. Nevertheless, they refrained from making any comments on that view yesterday and instead reiterated that the next move in interest rates is more likely than not going to be higher. As a result, cable extended the gains it made after the dovish Fed, despite the concerned Brexit comments by the Bank of England. Given the overall uncertainty in the run-up to the referendum, we expect that any future positive extensions in the pound may remain limited, as the latest Brexit polls still suggest a very tight battle between the stay and the leave side. Overnight, the minutes from January's Bank of Japan policy meeting, where the bank introduced negative interest rates, showed that officials also debated the expansion of their QQE program. Policymakers finally decided to adopt the negative rate policy instead by a 5-4 vote, but some members argued that this may send the message that the bank's asset purchases program is approaching its limit. Following Governor Kuroda's recent statement that interest rates could go as low as minus 0.5%, this new insight adds to expectations that officials may utilize both tools if they decide to unleash more stimulus in their forthcoming meetings. As for today's highlights, in Norway, the official unemployment rate for March is forecast to remain unchanged. In the US, the preliminary University of Michigan Consumer Sentiment Index is expected to tick up in March. From Canada, we get the CPI for February. The forecast is for a considerable slowdown in the headline rate, while the core rate is expected to remain unchanged at 2%, in line with the Bank of Canada's target. This suggests to us that the headline slowdown is mainly due to temporary effects. Nevertheless, since the loonie strengthened considerably in recent months, and at its recent meeting the bank judged that the factors that pushed inflation high will dissipate over time, we believe that the risks around the inflation outlook are skewed to the downside. As a result, a considerable slowdown in CPI could reverse some of the loonie's recent gains. We also get the retail sales for January, which are expected to have rebounded after falling the previous month. We have three Fed speakers on today's agenda: New York Fed President William Dudley, Boston Fed President Rosengren, and St. Louis Fed President James Bullard. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.